Hello, everyone. Welcome back to another live show. This is an exclusive webinar show series with the next level as we cover options masterclass just for you, crafted for you, and for all kinds of options trading levels out there from the beginner to intermediate. And of course, for the advanced seasoned investors out there, you can also stand a chance to ask your questions with Chloe Lynn today as we talk about the analysis regarding options trading during such times, especially with the markets right now. So thank you so much for joining us as usual. You're with me. I am your host, Olivia Higgins, and it's always a pleasure to have you on the show. Now today, you're thinking to yourself, the stock market continues to fall. Should I sell now? Should I wait? What is the next step? What is that next action we should take as we embark into the new year? And we've got so many questions in the discussions, especially for the live shows every week. And today we are planning to dive in straight into the strategy of option trading. Now, on the Moomoo platform, there are a lot of ways you can go about this. And today we're going to go and delve deeper into how you can do options trading further on the Moomoo trading app. So with that, I would like to welcome our expert speaker for today. We've got Chloe Lynn, trainer at the Next Level Academy. Hi, Chloe.
Hi, Olivia. Good to see you. You're so beautiful as always. I've been watching your show. It's been amazing.
Yes, we are such a pleasure to have you as usual. We've got people already asking about Chloe and what she's about to share today. So, as usual, today it's about education, right? It's about learning together and trying to figure out what is that best strategy to go forward. What is that next possible opportunity? And, going beyond markets, it's about strategizing. So, Chloe, what could you tell me about that with regards to options trading?
I think like what Olivia is talking about right now, the market is really uncertain. It's really volatile. And that's when, if you know how to use options, there are ways to hedge against the market volatility. There are ways to actually protect your portfolio, even though, for example, the market may drop further from here. And that's why today we will be talking especially on put option and how you can actually use it to your advantage to protect your portfolio as well.
As I know, I covered some analysis with the questions before when we had our previous shows together, but also, you've got so many tools, even with Moomoo, that you can explore for application regarding options trading. Now, for the markets right now and timing it, especially as an opportunity in itself, Chloe, what can you tell me about the current market situation and how it's important to start with options trading?
As you have observed, the recent 2 days we have experienced some drop again. I think just today, the market dropped yesterday about 1.5%. So that is why before the announcement that Fed is going to give very, very soon, there's still a lot of uncertainty. So right now the market is hovering, right? They are are they going to go up? Are they going to go down? There's a lot of uncertainty. And that's why if you know how to use options, especially during this uncertain period, and if you actually start to using certain option strategy, which I'll be showing you, and later on I will also be logging into the Moomoo platform to show you step by step how you can do that. That's how, if the market drop further from here, that's how you can protect your portfolio as well.
Absolutely, Chloe. Now, before you go into your sharing, now you mentioned some strategies. So let's go down to maybe 3 core strategies that we could summarize so that people watching or in the audience right now will stay till the end. And what will they learn from this sharing session?
All right. So today, the main focus will be really sharing with you how can you use options, especially put option to protect your portfolio. So even though the market dropped, that's how you can use it to not just not lose money. In fact, you can actually potentially use it to gain, all right, despite of the bear market that it's probably is going to continue to last, right? And then if we have more time, then we can cover 2 more additional strategies that is more for income as well as growth purposes when the bull market return. So I think the main focus will still be on the bear market because right now we are still in a bear market. So we want to have more time delving into the strategy, more time demonstrating using the Moomoo platform as well. And if you have more time, then we'll also be sharing with you some additional learning resources as well.
Thank you, Chloe. Now, for the audience that doesn't know or hasn't been to a show where we've, done with yourselves regarding options trading, this is a masterclass for options trading. Now, can you just tell me a little bit more about yourself?
Oh, all right. Thanks, Olivia. So just like what Olivia mentioned, actually, I'm from the Next Level, one of the key trainer and a key speaker from Next Level. And our company, our whole purpose is to really educate people and empowering them financially by learning how to invest, especially in stocks and options market as well. And if you know how to do options, actually, it does give you way more options than just buying and holding onto stocks. So that's why later on, I'll be sharing with you one of the strategies that you can use even during a bear market to profit, to even protect your portfolio. Yeah.
Excellent, Chloe. So we've already got questions coming in from the audience. Thank you to everyone who just joined us. You're on Options Masterclass with the Next Level. And we're here with Chloe Lin, who is our expert trainer today regarding options trading. Now, with that, Chloe, the floor is yours. I'm looking forward to your insights and what you're about to share.
All right. Thank you so much, Olivia. Okay, maybe I can start by sharing my slides. And there are a lot of things that we're going to cover. So on and off, if you have any questions, feel free to just leave it in the comment. And Olivia will also help to consolidate all the questions. And we will have even a Q&A later on as well. All right. So without further ado, let's begin with our slide sharing. Okay. What exactly are we going to cover in this options masterclass? All right. Okay, here we go. Okay, so can we get the slide started? All right, so now the first thing is, okay, so in today, as you can see from the slides, you can see that actually we are really talking about how can you hedge with the power of options, right? But as we have observed, right, since the beginning of this year, there are a lot of things ongoing. You can go to slide 2, all right? And you can see that from the Fed itself, you can see there are a lot of things happening. I believe all of you have already noticed that the market has been dropping because the interest rate has been hiking. Right. So, but lately, if you see like from year to date, from now, right, year to date, from like beginning of this year all the way until now, we have the market has actually dropped more than 17%. If you date back slightly earlier, actually we dropped more than 20%. So we are really in a bear market territory. And right now, it seems that it's lifting off. All right. But that lift, is it going to be a long lasting one, or is it going to be a fake bull that means the bear is coming on later on? So I will be sharing with you some additional insights. But some of you may be wondering, what is causing the stock price to lift off? All right. And if you go to the next slide, which is slide number 4, you can see that, okay, recently there are certain news that shows there is slowing down in the inflation, right? For example, the consumer price index rise below expectation. It's still rising, but it's rising slower than what we expected. And then from the producer, right, it's also cooled off, right? So that is why this is really sending a very good news to the market. And if you see the next slide, okay, the market immediately rallied after that. What happened is, all right, the Nasdaq jumped more than 7% after this news, right? And then the Dow also jumped, right? The S&P 500 also jumped 5%, right? That's kind of like what the biggest rally in 2 years' time. So why is this causing the market to jump? Some of you may be wondering, right? But the inflation is still ongoing. Why is the market jumping due to this news, right? And if you think about it, actually the market is really made of the investors, and investors are generally, we are humans, right? We are all emotional creatures. So there's a lot of emotion right now in the market in anticipation that maybe, all right, with the inflation start to slow down in terms of the increasing inflation, it start to slow down, maybe the Fed as a result may also start to slow down its interest rate hike, all right? So that is why to the market, to the investors, it is a good news. they don't, like, in general, our sentiment is we don't need the Fed to literally stop the inflation, right? We don't need the Fed to say that, hey, today I'm going to stop the increasing interest rate. We don't need to do that. As long as there is a slowdown in the rate of growth, then to investors, it's a happy thing, right? And that is why that is causing the market to rally, right? But I also want to ask, okay, the audience, right? What is your view from now, right? Do you think that it's a bullish view to you because it's slowing down in terms of the inflation, right? Or if you still think that it's pretty bearish ahead and you still think that it's pretty uncertain, maybe you can type bearish in the chat. Okay, let us know. Are you bullish or are you bearish, all right, from now onwards? Now, the thing is, okay, if you go into the next slide, which right now we are in slide number 7, okay? Slide number 7, my question to you is, okay, has the Fed changed its course yet? That means, has the Fed announced anything really concretely saying that they are going to really slow down the interest rate hike from now on? Or it's more like the market is anticipating, right? And if I've been listening just now, okay, I actually revealed to you the answer, which is the market is anticipating, and that's why the market rallied, right? So the Fed has not made any announcement yet. Now, if you are wondering, then when exactly is the Fed going to make announcement regarding the next interest rate hike? Okay, if you go to the next slide, you can realize that, okay, it's around the corner, which is 1 week down the road, okay, 13 to 14 of December. So that is why for the past 2 weeks, in fact, the market has been at the hovering level, right? It doesn't go down a lot. It didn't go up a lot as well. It's been waiting, right? Really waiting. What exactly will the announcement be? And that will really cause, in my opinion, quite a huge market movement after that, right? Because we have been waiting, consolidating for quite some time, right? And that is why it's so important that you learn to really execute certain strategies in advance, right? So that regardless which direction is the market heading to, right, you know how to protect your portfolio better, especially if the Fed is going to announce that, no, they're not going to slow down the rate, they're going to continue as usual, then I believe the market is going to react negatively, right? And then there may be potentially another pullback again, right? So that is why, okay, before I also want to share with you some additional information. If you look at the chart, okay, how many of you learned technical analysis here before? If you have learned it before, maybe you can type TA in the chat, okay? TA stands for technical analysis. And if you have gone through our 3-day options class, you will know that based on the support and resistance, can you guys tell me, based on the chart that I'm showing you right now, okay, which is just extracted from yesterday after the market closed, right? So this is the latest data. Do you think it's at support or do you think it's at resistance, okay? S or R. S stands for support, R stands for resistance. Type it in the comment. Let me know. What do you think? And if you learned it TA before or you learned from us before, you will realize that, okay, we are at the resistance level, which you can see the red line, right, which is that 200 EMA, right? The prices, whenever it touches the 200 EMA, it drop back, right? Whenever it touches, it drop back. So right now, in fact, it's touching, right? A few days ago, it was touching. And right now, there is a pullback already. And that's why yesterday, if you observe, the market actually dropped close to 1.5%, right? And from now on, will it drop further? I think it's still trying to wait for the Fed. But then if the Fed announcement doesn't go and in anticipated to what the market is hoping, then the drop may even come further, right? And that's why this is also another indicator saying that the market, the pullback may come very, very soon, which is already happening, right? Now, if you go into the next slide, right? Right now we are at slide 9, right? If you go into the next slide, which is slide 10. Now, we also know that the market there is made up of different psychology level, right? So what do you think is the market psychology right now, right? Do you think that we are at anxiety? All right, if you think so, can you type A in the chat? Or do you think that we are at the panic level? Okay, if you think so, type P. P stands for panic. Or if you think that we are at depression, okay, maybe type D. All right. Or if you think that if it's we are at disbelief, then type DI. Okay. What do you think? Okay. When I ask my my followers in my Telegram channel, you can see that different people have different answer. Right. Some people think that it's a depression. Some people say that it's disbelief and all this. But I think most importantly, at the end of the day, nobody can truly time the market. Right. How many of you agree, right? It's impossible for us to time the market. And that's why if you go to the next slide, right, rather than trying to time the market bottom, why not really by staying in the market, right? Because this is what Warren Buffett has been saying, right? You don't want to time the market. You want to be having the time in the market, continue to invest regardless, right? And that's why when you are investing in your portfolio, it's very important that you do have a long-term portfolio, which is like you're just buying good stocks, right? In fact, right now, if you buy good companies, like buy stocks via Moomoo, it's commission-free, right? So that's how you build up your long-term portfolio as well, right? At the same time, you can also consider some part of your portfolio to do option strategy, right? So that when the market comes down, you can even use options to protect your portfolio, which is what tonight's webinar is about, right? So don't try to time the market. Instead, stay in the market, right? The time in the market is more important. And if you go to the next slide, you can see that one of the way to stay in the market without having to worry so much is to follow Warren Buffett's advice, right? His advice is to buy a low-cost index fund, which the easiest one, it's your S&P 500, right? Which tracks the top 500 companies in the US. You don't have to worry too much because you don't need to individually select which companies you are buying. Once you buy S&P 500, which is the ticker symbol is SPY, which later I will also demonstrate to you on the Moomoo app. Once you go into SPY, literally you're buying the whole US market, right? And in the long run, when the US market continues to do well, that's how your wealth will also appreciate as well. And in fact, Warren Buffett is so confident about the US economy and the US market, right? That he said that after he passed away, right, he has already has his will set up everything, right? If you go to the next slide, he said that 90% of his wealth will be invested in the index fund. Right? And you can see how much conviction that he has. And after he passed away, he knows that nobody can really help to take care of his family anymore. And that's why he just wants to make sure he invests in something that's really safe, sustainable for his family, right? And that's how you can see the amount of conviction level that Warren Buffett has in the US economy. And if you want to invest in the long term, just like what Warren Buffett has been doing, this is what you can consider doing also. Right? And if you go to the next slide, right, which is slide 14, right? Slide 14, you can see that the S&P 500, in terms of the growth rate over time, it just keep on going up. And for the past 10 years, the annualized return just by investing in SPY, it's 13.39%, right? Which is, I think, pretty decent, right? Pretty decent, right? And if you invest for 3 years, that's also give you a 10%. But of course, the longer that you invest, this return will continue to compound, and that's how your wealth will start to snowball even more, right? But once again, some of you may also be wondering, right, which is the next slide, right? Some of you may be wondering, oh, slide 15, but the market may drop further from here, right? Even though I have a long-term investing horizon, I want to buy S&P 500 in the long run and just let it grow, but there's also short-term volatility. How am I going to hedge against it, right? And that is when we are coming to options, because using options, you can actually hedge against the market. And tonight, okay, we are going to mainly focusing on one of the strategy, all right? If you go to the next slide, okay, you will see the MOS system, right? Which, how can you use this MOS system to protect and even profit even during a downtrend market, a bear market like this? So I will be focusing on one of the strategy mainly, all right? If you have more time, then we talk about additional strategies right now, okay? So now, the reason why we want to use options, okay, is because we know that in the long run, the market goes up, right? You can see S&P 500, in the long run, it goes up. But in the short run, the market can go either direction, right? Next slide, it doesn't go up all the time, right? It can go sideways, right? Which is what happened to slide 18. It can go sideways, or the next slide, it can even goes down, right? And that is why, okay, using options, you can learn to protect it, right, your portfolio. And this is what especially we are dedicating our time to share with you tonight, because options will really give you more options. Now, before that, okay, I also want to understand every single one of your investing experience. Can we go to slide 21? All right. I want to see the audience here. What's your investing experience first, right? If you're a beginner, can you type B in the chat? All right. Or if you are somebody have certain form of investing experience, like 1 to 2 years, can you type E? All right. Or if you are very seasoned investors, 3 years, 5 years, or even some of you 10 years, right? Can you type S in the chat? All right. So are you B, E, or S? Okay. Let us know so that we can roughly understand how fast can we grow, can we go in this webinar. All right. If you are very, like most of you are a seasoned investor, then we can go faster as well. Right, but I believe most of you are probably mixed in terms of beginner levels as well. So, okay, step by step, okay, we'll go through. But before I share with you the MOS system, let me just do a very quick introduction once again about myself. Okay, my name is Chloe from The Next Level, and I think it's really a privilege of me myself really be able to surround myself with many great investors over the years. And if you go to the next slide, I think I have this privilege to learn from these two amazing gentlemen. One of them is Sean, and then the other one is Pete. They are both of my personal mentors, right? And I realized why both of them are so good is because they also learn from a very, very great investor, and her name is actually Mary Buffett, right? Which is the lady wearing the spectacle, right? And if you hear the Buffett, Mary Buffett, right? That means she is actually from the Buffett family. She personally learned from Warren Buffett herself. And I believe all you know how wonderful Warren Buffett he is, right, as an investor. So for Mary Buffett, go to the next slide. You can see that actually Mary Buffett, she is a former daughter-in-law of Warren Buffett, and she basically spent so much time in the same house together with Warren Buffett, really absorbing all his wisdom, the way how he invests, and over time through 12 years of period, right? That's how she learned the same system that Warren Buffett has been using all these years. And after that, she wrote a lot of books, right? In fact, how Warren Buffett invests, you can go and buy her books. It's all translated into different languages as well, international best-selling, right? And then most importantly, she also used the method that she learned from Warren Buffett to become a consultant to this fund, which is called UK Buffettology Fund. And that is a more than $1 billion fund. So in fact, for the UK Buffettology Fund performance, if you go to the next slide, you can see that it actually for for 5 years period, it actually outperformed Berkshire Hathaway, right? You can which is 73% return versus Berkshire Hathaway, which is Warren Buffett's company, 62% return, right? Of course, I'm not saying that Mary Buffett is a better investor, but I really think that the method that she learned from Warren Buffett, it really works. And that's how she's able to also use the same method to grow the wealth for her clients as well. And that's how when we learn the system from her, we are also able to grow our own wealth and subsequently using this method to educate more people. So it's really our mission and vision to educate more people. And if you go to the next slide, in fact, previously before COVID, okay, right now the border has started to open up, right? Japan also recently opened up. But before that, Japan was closed for like 2-3 years. And it's unfortunate that we couldn't go back to Japan as often as we like to. But in the past, I was constantly being invited to Japan as well to share with the students in Japan the way how Warren Buffett invests using options as well. So tonight, okay, I will also be sharing with you one of the strategy that you can consider adopting, right? Especially in this volatile market. Now, if you go to the next slide, all right, this is where we are going into the MOS system. And I want to specially talk about S, okay, which is later on I will share with you what is this S system. Now, but I believe some of you are also beginners. So if you are very new to options, let me first explain to you what are options first, right? And then how you can use options later on to protect your portfolio. Next slide, right? Now, what are options? Options actually is very simple. Okay, you view it as a contract. Okay, instead of a stock right now, it's a contract, but the underlying of the contract is still based on stocks, right? So that is why it's so important that when you execute options, be it whatever strategies you're going to use, you also have to understand underlying the stock itself. Is it a good company, right? If it's a lousy company, I think regardless what kind of option strategy you are going to use, it's going to be pretty detrimental in the long run to your portfolio. So you still have to make sure you understand whether it's a good business, is this a good price to buy before you execute any form of option strategy for yourself. Now, when you have this financial contract, right, basically it will give investor like you and me, right, the right or the obligation to buy or sell the stock for a period of time, and then at a certain stock price. So you can see that there are many things happening in this one sentence, which I'm going to break down for you very soon. But very importantly, you have to understand in terms of options, okay, there are always buyers and seller. Okay, if you go to the next slide, okay, which is at slide 28 right now. Okay, slide 28, in the options market, right? Remember the financial contract, right? The contract, in order for it to take place, there must be a buyer willing to buy this contract. There's also be a seller willing to sell this contract. And that's how transaction of these options can happen. Now, very importantly is when you are buying something, right, you need to pay money first, right? For example, let's say if I want to buy this water bottle, I need to pay money before I can buy this, right? So the money that inside the option market is called premium, okay? Can everybody help to type premium in the chat, okay? So when you pay premium, you buy the contract. And vice versa, if you sell an option contract, you will then get to collect premium. So in this scenario, okay, we are going to be option buyer. Can everybody type buyer in the chat, okay? And why do we want to become an option buyer in this case? Because if you go to the next slide, we are going to learn a safety protection strategy. All right, and that's why the S stands for. S stands for safety protection. How can you have protection? How can you have safety for your own portfolio? Okay, you want to make sure you buy option to protect your portfolio. The same concept like you are buying an insurance, right? So you pay the insurance company certain money first, right? And in return, you manage to buy a peace of mind. What kind of peace of mind is that, right? For example, let's say I believe most of us have insurance, right? And the reason why we want to buy it is because in case anything happens, for example, in case we get into an accident, in case we fall sick, then we will have a big sum of money that's going to pay out to us for us to tide through this bad period of time, right? But in order for us to even be entitled to receive this amount of money, right, we have to pay the insurance money first, right? Insurance company money first, which is also called premium, right? And in return, because we pay for the premium, and then if really anything happens, we will have the protection that we need. Now, it's the same concept when we want to buy an insurance for your investment portfolio. Now, if you go to the next slide, right, you can see that based on this chart, okay, the stock price of S&P 500, right, dropped 35%, right, within just a short 1 month, right? Back in COVID, the crash, okay, from February all the way to March, in just 1 month's time, right, S&P 500 dropped from $340 all the way to about $220, right? If you buy and hold on to the stocks, your stock position itself is losing 35%. And let's say if you have 100 shares of S&P 500, that will translate into a 5-figure loss, which is more than $11,000. Now, why do we want to use 100 shares as an example? Is because one more very important thing about options is one option contract is always equivalent of 100 shares. So can everybody type 100 in the chat so that you can remember this, okay? Because if you want to buy individual stocks for US, you can buy and sell 1 share, right? However, when you do option, one option contract is always equivalent to 100 shares. So that's why I want to use 100 shares as an example to illustrate the difference between you having a option protection versus you don't have option protection, all right? So right now, okay, let's say in this case, you do not have. That's how your 100 shares will lose a lot of money, which is your 5-figure losses right now, right? However, if you know how to use options to protect your portfolio, this is where instead of losing money, you actually gain to profit when the stock price comes down. Now, if you go to the next slide, which is this strategy is in fact one of the strategy that we teach in our 3-day option class as well. It's called strategy Y, right? And how can you use strategy Y to hedge with options to potentially protect and profit even that when the market drop, right? It's like buying an insurance. When the bear market, when the market really becomes sick, which in this case is drop, when it drop, instead of losing money, you actually protect it because right now your insurance, your option insurance kick in to give you amount of money, a good amount of money to help you to tie through this bear market. Now, how does that work? Okay, so now if you go to the next slide, there are 2 types of options. Okay, the left-hand side is called call options and the right-hand side is called put options. And in this case, we are buying put option. Can everybody in the comment type buy put in the chat? All right. So you must be a buyer. Remember, we buy insurance, but what insurance are we buying? We are buying a put insurance. Now, why do we want to buy a put insurance? When you buy a put insurance, it literally means that you have, remember just now, you have 100 shares, right? 100 shares of S&P 500. Right now, if you don't have any put insurance, the share price drop, it continues to drop for your portfolio together, right? However, when you buy a put insurance, literally, for example, if you go back to the slide earlier, which is slide 30, right? The 100 shares, negative 35% drop, right? If you buy a put insurance earlier, for example, at $340, when you buy a put at $340, it means that you lock in your right to sell away your 100 shares of S&P 500 at $340. So later on, when the stock price continues to drop, no matter how much it dropped, right now, actually, in fact, it dropped to $220 over dollars, right? Even though it dropped to $220, you can still sell your shares at the original $340 because you bought a put at the strike price 340. Literally, you lock in your share price, sell price at 340. And that's where your insurance comes from. Your insurance comes from protecting your selling price. Your selling price will always stay at the price that you locked in. No matter how much you drop eventually, you can still sell at the original high price. And that is the insurance that you bought. Now, imagine if you really bought your insurance back then, and if you go to, okay, slide 30, okay, let me see, slide 33. Okay, if you go to slide 33, why do we choose to buy a put insurance? Okay, it's because you realize that the market is overvalued, right? You do not want to buy insurance all the time, right? Because sometimes when you are relatively healthy, remember, like for example, when you're very young, you're relatively healthy, you don't need to buy insurance so quickly, right? But only as you continue to age, you feel that your health is deteriorating, you start to get a little bit concerned, and that's when you start to buy insurance, right? So the same analogy can also be applied to the stock market. You do not need to buy insurance all the time. You only want to buy it when you realize that the market is overvalued. That means the stock price continues to go up, but there's no actual earnings or substance that really can back the hypergrowth in the stock price, right? And that's when the gap between the stock price to the actual value of the stock become wider and wider. This itself can become a bubble, right? And before the bubble bursts, that's when you want to consider buying an insurance, right? In case it bursts, that's how you protect your portfolio as well. So the value line itself is very important, which is the value of the company. So we don't have time to talk about it today. In our 2-hour free masterclass, we do talk about the value line. So later on, if you want to, we will share with you more resources. But very importantly is you only want to buy it when it's overvalued. So, which actually happened back then, right? During the COVID time, the market continued to go up, and yet there's no actual substance to sustain the growth. And that's how eventually, when things happen, it starts to collapse, right? So you buy a put options at the original high price, which is 340, and when it continues to drop, okay, that's how you profit. So if you go to the next slide, all right, slide 34, you can see that when you buy a put options, remember, you need to pay some money first, which is the premium. How much are you paying in terms of premium? All right. Back then, it's about $1,000, right? And when you pay that $1,000, when the market really collapsed, which dropped 35%, right now your insurance can kick in and it can actually give you a lot of money because you get to claim the insurance. So how much can you get to claim back? You get to claim back eventually the same contract that you bought. Remember, you bought the put option. When you decide to sell it back to the other people you sell back to the market, you actually can get back more than $10,000. So can you see that if you still remember, if you hold on to your 100 shares, you will lose about 5-figure, right? Right now, because you bought that put insurance, instead of losing that 5-figure, you actually use options to cushion and actually make back about a 5-figure as well, right? And that's how you use it to protect your portfolio. So, and next slide, okay? So just now we talk about valuation, right? Which is you only want to buy it when it's severely overvalued. And secondly, another way that you can do strategy Y, which is buying a put option, is you can consider using technical analysis once again, right? So using TA, you can consider buying it when it reaches resistance level, because when it reaches resistance, very likely it's going to drop back down again, right? Which is right now it's happening, and that's why the past few days the market start to drop a little bit, right? And that's how you can also use TA, right, to help you to enter and exit your option strategies better as well. So it's very important that you need to combine options with different knowledge, all right? Not just knowing the strategies, right? Because strategies, you can know it, but different market condition is different. So that's why you really understand the fundamental analysis, the technical analysis, right? Which that's how you really have different tools at your advantage, right? So right now, okay, what I want to do is, I believe some of you are like right now a lot of theory, right? But practically, how do we do it? That's when, okay, we want to go to the next slide, which is how can you use the Moomoo app, right? Which is a very easy, very convenient to use. And in fact, right now, Moomoo supports so many different option strategies that you can use. And right now, I'm going to log into my Moomoo and demonstrate to you step by step how you can use it to implement the strategy Y, which is the safety protection strategy I just shared with you, right? So is that okay? If that's okay, maybe right now I can start sharing screen using my iPhone, because I'll be using a Moomoo app, right? So I'll be using my iPhone to share screen, and I can showcase to you step by step how you can also buy put options safely for yourself, right? Because you do not want to overpay for your option premium as well. The same analogy in terms of you do not want to pay too much for your health insurance, right? The same thing when you buy a protection for your portfolio, you also want to make sure you pay it reasonably, right? Rather than overpay for your option premium, right? So now I'm going to share screen. Is that okay? That's okay. I'm just going to share right now. Good. Okay, so done. Start broadcast. Okay, so now I'm sharing screen. Okay, good. I think you guys can see already. So, all right. So there's the Moomoo app. Now, the first thing that you want to do, right? Let me just hide this so that you guys can see it better. So the first thing that you can do, right? Right now, I am at the watch list area, but you can see that on your right-hand side corner, there's a magnifying glass, right? You just click there, all right? And I am using S&P 500, which ticker symbol as SPY. Why do I want to use SPY? Is because once again, if you observe the chart of the market right now, it's at the resistance level, right? And that's why it's possible that the market is going to pull back from here. And that's why I want to buy a put insurance against the market volatility. And in case it drops further from here, that's how I can use it to protect my portfolio. But I think it's also very important you understand that like the put option that you are going to execute, it may not be applicable to everyone, right? Because if your portfolio is very small, probably it doesn't make sense. However, if your portfolio is bigger, then it's wise to actually protect your portfolio using put options. So right now, I'm going to demonstrate how you can do that. So once I key in the ticker symbol SPY, you can see that the first one is already here, which I already have a heart shape, right? So all you need to do is to click on the first one, SPY. And then after that, can you see that there are many different things on top that you can scroll? Right now, we are at the quotes area. I want to scroll to options, all right? And once you click that, okay, the options is being highlighted, right? And then at the bottom over here, everything is called option chain, right? This a lot of numbers. This is option chain because there are different strike price that you can choose. There's also different option dates that you can choose. Now, the current date is in December. So when you buy a put option, you don't need to buy too long. That means your insurance contract do not need to last for 2 years, right? Because that means if you pay too long the insurance contract, it's going to be very costly. So generally, our recommendation, our advice to our students is buy about 6 months to, I think, about 1 year should do, right? So in this case, I'm just going to stick to 6 months options. Now, what you can do, right? And you can see there are different dates on top, right? So right now, it's in December. So you need to scroll all the way to the right-hand side so that you can see the dates for 6 months later. So that is why I'm going to use this date, 16th of June, 2023, right, which is about 6 months from now on. Right. So once I choose the date, you can see that the date is already highlighted. The next thing I want to do is I want to select the strike price to buy the put option. Remember, when we select a strike price, that means you are selecting the price to lock in your sell price, right? Your sell price of your shares, right? Technically, it's your 100 shares, your sell price. That's why right now the market, it's about $391. How do we know? We can see that pre-market at the top below S&P 500 is 391.25, right? I want to select a price that is very close to the current market price. So what I'm going to do is I'm just going to select $393, right? Which you can see it's almost like how do you usually select? If you cannot really determine, right? You can determine by the color difference. So right now you can see that there are a blue box, there's also a black box region. So there's a segregation area which we call it at the money. So what you need to do, right, is to select the segregation region, and that's why I will select 393. And all you need to do next is you can see on your right hand side there is PUT, which is the put, right? Because remember, we are buying a put option, and that's why you want to select the put region over at the right-hand side, okay? And now I'm just going to select 393 and the put option region, and I click it once, right? At the bid area, I click once, and now, once again, there are so many different things over here. Actually, all you need to do right now is to go to the bottom. There's this trade button, right? You click it once, okay, you click the trade button, and now, okay, this is where you can add in the quantity of your option contract. So my advice for you is it's the first time you're doing it, consider starting with one contract first, all right? Because literally when you have one contract, it means that you are technically controlling 100 shares, right? So in this case, I'm just going to change my quantity into 1. Now, what about the amount below? Okay, this amount, 2343, is the premium that you will be paying in order to buy this put option. So you can choose to bargain a little bit more. So how can you bargain? For example, right now, okay, the price is 23.43, right? The price is listed. This is the premium that you'll be paying per share. But because one option is equal to 100 shares, you need to times 100, and that's why eventually it's $2,343. So you can choose to bargain a little bit, maybe to $23.26, okay, about there. Okay, how do I get this number? Basically, I am just trying to see from the bottom, there's a bid and ask. I want to lower down to the lowest price so that I can buy it at the lowest price. But if it doesn't get transacted when the market opens, maybe I just have to wait a little bit more. And if not, you can adjust up a little bit to make sure your contract can be filled easily as well. So in this case, I'm just going to stick to the lowest one, right? So that to make sure I pay the lowest in terms of premium. And then once you confirm everything, you just need to click the buy button, all right? So once you click that, once you have the Moomoo app, you just have to make sure you enter your password to make sure that this trade it's sent by yourself. And once done, when the market it's live, which right now it still have about 2 hours to go, right? So when the market is live, that's when the trade is filled, it will be inside your Moomoo portfolio. All right. So that's how you can use Moomoo. Yeah, and right now, in fact, Moomoo even has a promotion, which I think later on Olivia will share with you, which is really good. It gives you free commission trading for options as well for the first 1 month. I think it's like a lot of good bonuses that Moomoo is giving. And if you buy stocks, okay, not talking about options, let's say today you don't want to do options. You just want to do something very simple that Warren Buffett said, right? Just invest in the S&P 500. All you need to do, all right, is once again, okay, go back to your magnifying glass, and I'm just going to demonstrate one more time. Once again, you just key in SPY, all right, and you click the first one. Now, right now, this is in terms of, just now I demonstrated using options, right? And that's why you need to scroll on top to find the options. But because right now, let's say you don't want to do options, you just want to buy stocks. How to do so? Very simple. You don't have to scroll anywhere. It's still at the quotes region. Can you see below, there's a trade. You just directly click the trade tab, okay? And immediately, right, a screen will pop up, and this is just buying stock itself. Right. So right now, the stock price is about 391.28. And let's say you want to buy 10 shares, okay? You can buy 1 share, 10 shares, it's up to you. So for example, I'm using 10 shares as a demonstration, right? So I change the quantity to 10, and then you can see the amount that you pay, all right, to buy the 10 shares is about $3,900. And once you are done, okay, you are okay with it, you just click the buy button, and that's how you can buy stocks from Moomoo as well. And it's absolutely commission free, right? So it's like really good for you to build up your long-term portfolio through the Moomoo app as well, right? So in the meantime, okay, do we have any questions regarding the demo platform? All right, if we do, maybe Olivia can let me know. If not, maybe I can continue to share a little bit more about 2 additional strategies. Okay, maybe I share first. Okay, so I'm just going to unshare my screen. I'm going to stop share, and I need the slides to go back up first so that we can continue some of the other strategies, okay? Because we still have maybe five more minutes time in terms of my sharing. Okay, now I believe the slides are back. Now, so just now, we use Moomoo to learn how to buy a put option, which is strategy Y, to protect your portfolio. So right now, the stock price, it's about $390, right? Let's say after the Fed announcement, everything is still as hawkish as usual, the stock market pullback. That's how your put option will start to profit, right? Because you literally lock in the sell price at 393, which is your stop to sell at 393. But let's say if you drop to 370, you can still sell at 393, right? So that's how you can protect your portfolio even when the bear market continue to come. Now, the next option strategy, which is slide 37, this is more powerful in terms of those who want to have income, right? That every single month, or in fact, some of you want, if you are more active, you can also choose to do it every single week or 2 weeks also to get more additional income through the power of options. So just now, we talk about buying options, right? Right now, it's the opposite, right? You want to become the seller of options. And why do you want to become a seller of options? It's because, remember, when you sell something, you collect money, right? And just like what insurance company has been doing, when they sell their insurance contracts away to you, right, you will have to pay them money, right? So in return, the insurance company get to collect premium every single year from you. And in this case, actually, like at the end of the day, who is the most profitable, right? Are you more profitable, or is the insurance company more profitable? And if you think about it, actually, it's the insurance company. Because in the long run, if you continue to do, and of course, they will do the background check on you. Are you a person who have a good health? You know, do you smoke? Do you have disease? After they do the background check, right? When they see you to be a suitable candidate, they will sell you insurance, and that's how they really get a lot of free cash flow income and premium from you, right? So in this case, we can become insurance company as well in the options market. And if you go to the next slide, all right, which is slide 38, all right, you can see that by being a seller of insurance, okay, in this case, we are selling put option, right? Why do we want to sell put option? It's because you actually are promising to buy this stock at the price that you want. And because you are selling a promise to buy the stock price, regardless how much it dropped, you will still buy at the original price. That's how you are insuring against other people. And that's how you will get to collect premium. So that's why it's so important that when you do BOSS option strategy, in this case, it's selling a put option, you want to make sure you only do it on good company at a good price. Because if you anyhow promise to buy lousy companies at lousy price, that's how you're going to become very dangerous, right? So if you do it on good company, do it at good price, it's going to be a very, very safe strategy and in fact gives you additional income. So for example, if you look at, this is one of the option trade as a demonstration. Let's say you do it on Berkshire Hathaway, which is Warren Buffett's company, at a very good value, right? A good price, a good company. You just keep on collecting premium that's like $5,000 premium being collected over a period of time when Berkshire was going sideways. That means when you buy and hold the stocks, when the stock doesn't move much, yet as an option seller, you are collecting very good passive income. And right now, in fact, if you ask me, even though the market is uncertain, right? But if you know that there are so many businesses out there selling at good prices, which you have since the market has dropped so much, so many wonderful companies are selling at good prices. If you use BOSS option strategy as a seller, put option seller, you get to collect income. At the same time, you get to buy good company, right, at a good price. And that's why, like, if you go to the next slide, right, slide 39, right, Warren Buffett has also been a person has been constantly also using put option strategy as well to generate a lot of cash flow, not just in terms of thousands or 10,000s or millions. In fact, it's $4.8 billion in terms of option premium as well. So it's one of strategy that's very safe, but you have to make sure you know what you are doing. All right. So the next slide, okay, let's quickly go through before we move on to Q&A. Okay. The last one, it's more about optimal growth, which this strategy will be useful when the bull market return, right? But due to the time constraint, I really don't have time to share with you how can you do that. But basically, when a bull market return, right, that's when you want to use option to accelerate it faster. Let's say when a stock price only grow by 10%, 20%, just on the stock itself. But if you know how to use this strategy that can help you to accelerate your growth, you can potentially gain, even though the stock price gain by only 10%, your option using this strategy can gain by at least 3 to 5 times. Right? That means it's 30%, 50%, or even 70% or more. Right? And Warren Buffett also uses, like if you go to slide 41, he made $12 billion on Bank of America using this very powerful option strategy. But due to time constraint, I don't have time to share with you tonight, but it's going to be a very, very, once again, options really provide you a lot more options in different market conditions. So it's really good to learn. And if you go to slide 43, we do have our next level options masterclass. So if you do not know anything about options yet, but you are very keen to learn more, and then you are ready to level up even more to see how options can help you in different market conditions, then do join us in our next level options masterclass. Okay, my team member will also be posting the link for you to join us, okay, in our upcoming free 2-hour webinar. So you come to learn even more about it, and then see whether it's option something that you are very, very keen to level up also. Okay, so for us, we also have our Telegram channel from the next level, so which is t.me/next level academy. Okay, which is the next slide. Okay, you can also continue to join us to stay connected to get additional insights from us as well. All right. So with that, okay, I believe we have some questions from the floor, and maybe right now we can also invite Olivia back for the bonus Q&A. In the meantime, I understand that Olivia from Moomoo side also has an option starter kit that she wants to share with you some additional amazing option bonuses that Moomoo is rolling out right now.
Absolutely, Chloe. Thank you so much for your key insights regarding options trading and for that comprehensive demo you just had for us. Now, you mentioned options can give you options. I really like that tagline. I think that's something we can summarize for the end of your sharing session. Now, let's go into questions because we've got a lot of questions from the audience. Now, the first question for Chloe: what are some ways I can use options trading to maximize my profits for the next year? And what are some risks that you would like to highlight regarding this?
I believe next year it's gonna be, once again, we will not know how will the market react. So depending on your portfolio size. So like like I mentioned earlier, if you do have a bigger portfolio, for example, in my opinion, maybe like at least a high 5 figures or 6 figures or more, you really want to learn to protect your portfolio in case the market drop further. That's how you can use the strategy Y, which is a buy put option that I showed you earlier just now. However, we also know that generally the bear market cannot last forever, right? So based on historical data and research, generally bear market lasts for about 14 to 15 months. So if you count from the beginning of this year until now, we are almost like 1 year into the bear market. So the next few months is going to be a very crucial period. And if the bear market does come to an end and start to turn up, that's when you really want to consider using one of the other option strategy I shared with you. When a bull market returns, you use it to accelerate it further. So that's how some of our students, right, when they came to learn from us, and when they executed the option strategy during the COVID crash, right? Do you remember during the COVID crash, the market sentiment was still very negative, but then when the beginning of the bull market comes in, and we actually ask our students to really start to execute the bull market strategy, that's how they really accelerate their portfolio growth tremendously. So highly recommend you to come and learn different option strategy so that you are more familiar with different situations as well.
Absolutely, Chloe. Next question. For capital, so what would you say is a good amount or a safe amount to start as a new options trader?
Okay, so once again, different people will have different pocket size. So depending on you, in my opinion, okay, if you can afford 5 figure, that means if your beginning portfolio can afford 5 figure, I would advise really go with 5 figure, because sometimes we understand there are some students that they have this hesitation. They say, oh, but I'm so new. Even though I have 5 figure, maybe I'll just start with 4 figure. So they want to start with something smaller first. But if you really understand options well enough, you will understand that actually the bigger your capital, the safer it is. Because depending on, once again, the option strategy. For example, let's go back to the strategy Y. If your capital is only 4 figure, I think it probably doesn't make sense to even use strategy Y, which is the protection strategy. Because at the end of the day, when we buy insurance, we do not try to, our mentality is not trying to profit from our insurance, right? We do not hope that, oh, I get sick, then I get a lot of money from the insurance company, right? We do not have that mentality, right? The same thing when it comes to your portfolio as well. If you start with 4 figure, then it probably doesn't make sense to have a strategy Y. However, you may want to consider using strategy X, which is the growth strategy when a bull market returns. So as much as you can, I would say that really start with the amount that you are comfortable with. But very importantly, this should be the funds that is not rainy day funds. That means you are willing to really let it sit inside the stock market, and which it does not affect your standard of living.
Very important, Chloe. Thank you for highlighting that. Now, next question, since you mentioned insurance, someone would like to know in the audience, if I'm pretty sure which companies I'm buying into, why do we still need that insurance?
Very good question. So once again, okay, it depends on your portfolio size. So if you're very sure regarding this particular company, and if the portfolio allocation to that particular company is not even a lot, maybe you don't need to buy insurance, because even though, let's say this company, even though you've done your research, it dropped by 50%. Let's say it's a 5% of your portfolio. The maximum impact to your portfolio is 2.5%, which is not a lot. However, I know there are some investors or some of our students, they are very convicted into certain company, and they go in 50% in one single company. But I think nobody is ever perfect in our analysis, even though it can be a good company, but maybe in the short term, it may not materialize. Right? So for example, if you look at some of the very good businesses, be it Google, Facebook, in the past 1 year, it also dropped a lot. Even Facebook dropped like more than 50%, right? So even a good company can come down in prices severely. So if you have a huge allocation in certain company, and even though you have high conviction in, but when the stock market is ruthless, it will be very ruthless. So if the portfolio allocation is too much, then it's good to consider buying some protection just to have that cushion.
Thank you, Chloe. Next question is about time horizon. Now, what would you say is the optimal period for an options trade? And for me, I tend to keep within 3 to 6 months. Chloe, I would like to know what is the best time horizon for right now in such market conditions?
I think that it's a perfect question. It's a very good question. And I think once again, when you do options, you will understand that it's definitely more short-term as compared to you buying and holding onto the stocks. So I think it makes sense when you do options, you really need to monitor the market more as compared to just being a shareholder. So that's why for myself, I will also look at technical analysis, because different stocks or different markets do have different time variation in terms of how the chart performs. Some charts take just maybe 1 month's time from support to resistance. Some charts probably take 3 to 6 months time. But I think ideally you should be, when you do options, you should be at least doing your revision of your chart, your homework once a week. And then you know that, oh, after that, this week, what should I do? Should I be closing my option position, or the chart is still not yet reached to the resistance? Then you can hold on to it furthermore before exiting your option strategy.
Thank you, Chloe. Next question. Now, this is more about options and futures. So, Chloe, what is the primary difference between the options market and the futures market? And in terms of asset allocation, what would you say is a good strategy for next year?
Firstly, I'm not an expert in futures market, so I don't think I have the knowledge to comment properly on that. But in terms of options, I believe it's always important that we do not just, like, let's say you learn options, we 100% go in option. You can always have a combination. So if you are somebody who have experience in futures and you're confident in that, then you can consider allocating some part of your portfolio in futures, some part of your portfolio in options, and some part just buying and holding on to stocks. So for myself, I do stocks and options at the same time. And in terms of strategy wise, I think just like I said earlier, okay, the next few months is going to be quite crucial. So I will be monitoring actively regarding how the market is going to be performing. So if the market is really able to withstand the current resistance that we are facing right now, in fact, a breakthrough and continue to run forwards, that's when I will start to adopting the strategy, optimal strategy for the bull market to return. But in the meantime, I will not enter that strategy yet because we are still in a bear market. And that's why buying put option protection is good, or if not, using BOSS income strategy is also very good to collect income at the same time, able to collect shares at a good price.
Thank you, Chloe. So the next question, Chloe, I am a bit more risk adverse. Now, what is your advice for someone like me to enter this side of the investment world? And also, what are some key indicators I can learn from this session with regards to making a decision of whether I want to invest in a company or not?
Okay, so as a beginner, I think most importantly is you want to get yourself educated, right? Because you do not want to anyhow go into the market without knowing anything and end up losing money, right? Because Warren Buffett's rule number 1 is never lose money. How can you not lose money? By firstly, I think one of the way that I talk about it just now is long term. If you invest for the long run, if you just buy S&P 500, but once again, it's never a stock recommendation, but do your own homework. Warren Buffett has decided to allocate 90% of his assets into buying S&P 500 index fund after he passes away for his family. And this is what you can consider if you are a long-term investor like Warren Buffett, right? And the second thing is, in terms of you are a very new investor, I think really learn first, right? Learn more about different option strategy. If you are uncertain which option strategy to use first, maybe you can even consider just by buying stocks first. Get yourself familiar with the stock market as a vehicle before you venture into options, because at the end of the day, options is based on stocks, right? The underlying is always the stocks. So you want to make sure understanding, is this a good company, right? What is a good price to buy? Then you can consider using options as a tool to either protect your portfolio or accelerate your return. And that's why in our 3-day class, we always focus on really buying good company first. We teach our students how to analyze it so that they really have the confidence to do it well. Yeah.
Right. I think that keyword confidence is quite important. And that comes with educating yourselves about the core part before you embark on a new strategy for yourself. So thank you to the audience member for that question, because I think that was a recurring question within our community members. Now, Chloe, someone would like to know, Chloe, how did you get started with options trading? How much do you make from options, and how much can I make? Could you show us some key ways you do it?
Okay, so I think during my initial years of investing, I actually made a lot of mistakes. Maybe some even worse than some of you. I lost a lot of money, like about $50,000 as well, because at that time I learned a lot of things, but I felt that I learned, but then I don't truly understand the principle behind that, and end up I was doing a lot of silly things, mistakes, and that's how I lose money. But I think very importantly is, even though, for example, if you're losing money, don't give up, all right? Because if you learn from your mistakes, that's how you will become a better investor. Even Warren Buffett makes mistakes as well, but he chose to learn from it, and that's how he become who he is today. So, and secondly is for myself, when I first started learning options, I also make mistakes. And actually, my majority of my $50,000 losses was coming from me executing option strategy without a proper plan, without true understanding of what is options. So that's why I felt it's so important that you need to really get yourself educated well, properly, understanding the risk, understanding the portfolio sizing, the position sizing, and then whether is this strategy suitable to be executed at this period of time, because market condition always changes. So once you understand that, then you will have more confidence to know what to do, right? And I believe if you do not have the capability to execute all the different option strategy out there, I think it's fine, because beginner, we always should start step by step. So my advice to my students always is, you guys can start with BOSS option strategy, which is as a seller of options, right? You collect insurance premium, but how can you do it safely? Is always make sure you are promising to do it on a good company at a good price. And that's how you are able to really collect good businesses at a good price, at the same time collect premium. So I think that it's one of the safest strategy, and that's what Warren Buffett has been doing as well for the past 20 over years. Yeah, so this is something that you can consider, but get yourself educated first.
Key points there, Chloe. For a seasoned investor, and we've got a couple of seasoned investors here, Chloe, where should I go in terms of direction for next year? And I understand we cannot, of course, make recommendations, but if you were to share some of your insights, what is some advice you would like to share with the seasoned investor in the options trading space?
In terms of direction, I think just now I also gave the answers already. Right now, I'm observing the market. So the market is uncertain, as you can see from the past 2 weeks.
Nobody knows.
Yeah, just hovering and hovering. So there's no perfect, very clear-cut strategy for now, right? But if you want it to be super clear, I think BOSS, which is the sell-put option strategy, is the safest thing to do right now. And because we also know that so many good companies have dropped to a very decent valuations, that's how I have the confidence to say, hey, even they continue to drop further, I feel that I'm comfortable holding onto the shares at the price that I promised to buy, right? And eventually, because it's a good company, given time, the stock price will appreciate. But of course, we need to have the patience to give it time as well. So if you do not have a particular company that you are very confident or you have high conviction in, you can even do BOSS option strategy on the index, right? Which once again is, let's say, S&P 500, that you are promising to buy shares from the, just basically the whole US market, right? So that's something that's really easy to do. So that's the first question. And the second question is some insights. So once again, I think as an investor, with the market being so volatile, I think it's very normal to feel uncertain, like, oh, am I doing the right thing? Is this the right company? But really detach yourself from the stock price and look really around you. What's happening in your life, or what products and services that consumers, your friends, your families are using, regardless of what's happening. Because a lot of time you will feel uncertain because you keep on seeing the news, you keep on monitoring the stock price. But if you talk to non-investors, which I believe all of us have non-investor friends, right, or family members, you talk to them, you see how they behave, what are they continuing to use? Are they still using Google? Are they still buying from certain supermarkets? And that's how you know that, hey, even with the inflation ongoing, even with the potential recession coming, there are companies that continue to make money because the customers continue to use them. So from that, you get investment ideas, and really from then look into the financial report to see, is this a company that you have confidence in? And are you willing to actually buy, or if not, add more during this period of time?
Mm-hmm. You brought up an important point there about, navigating through that, emotional stage of really, being practical and rational about it as much as possible, right? Not really putting yourself on a personal level with particular index or whatever decision you're about to make. So thank you, Chloe, for summarizing that for the question the audience asked at. So next question, last two questions from the audience. We've got so many, but I've picked out the best ones, of course, which I believe are beneficial for the wider audience. Now, next question, Chloe, when you buy a put, do I need to have the 100 share?
Very good question. You do not need to, remember, because it's like when you're buying a put option, if you don't have 100 shares, it's okay, because you can choose to sell away your put option contract, which remember, when it comes to option, there's always buyers and seller. So when you buy the option, you now have the contract. When you have the contract, what can you do? You can choose to sell this contract away to somebody else. So that's another flexibility in terms of options, is it doesn't require so much capital as compared to owning 100 shares. So that's how when you sell away option contract, you can also profit as if you are, even though you don't have the 100 shares. Yeah.
Thank you, Chloe. Last question, and I think this is a great question. So, Chloe, I am usually affected by time pressure related to options trading. So what are some strategies I can use to navigate the time pressure element and also the market uncertainty?
So I believe this investor has been investing using options, and that's why he understands that for every option contract there is time, right? And if you feel that you've pressured by the time, maybe you need to ask yourself, is it because the option contract that you bought or usually as a buyer, right, you bought is too short? So when you are such a short duration, of course, you will feel pressurized because nobody can really know what's happening to the stock market in the next few days or even the next 1 week or 2 weeks ahead, right? So that's why our advice to our students most of the time as a buyer, right? Especially like just now, I'm talking about buying a put option, right? So because buying put option is more like for protectional purposes, we do not want to overpay. So, but you can still see that I'm not talking about very short duration. I'm not talking about 1 month put option, right? I'm talking about at least 6 months to even, if you can afford, a 1 year put option, right? And that's how you have more time on your side rather than feeling that pressure due to the decay of the options time decay, right? On the other hand, if you are doing the other side of options, which is buying call option, our advice to our students is actually, if you can afford, buy minimally 1 year and more, right? And that's how you have more time on your side. So once again, I think options is just a tool. Most importantly is the right mindset when it comes to executing it. Yeah.
And what you also talked about and highlighted is about manipulating time for it to be on your side.
Yes, yes.
You covered that during your sharing earlier.
Yes, that's right. That's right.
Additional to add to that.
Okay, so when it comes to options, because there's time on the contract, so once again, it depends on whether you're a buyer or you're a seller. So as a buyer, you want time to be on your side, right? So that's why generally you want to do a slightly longer duration contract. But as a seller, you actually get to profit when your contract is not too long, right? If you sell a very far option, like let's say 1 year, and I sell a put option 1 year, that means I have to lock in my promise for 1 year. That somehow like really just limit your capital allocation for the 1 year period. And that's why as a seller, you should consider selling shorter duration if you want to, 1 week, or if not, 1 month, right? Depending on how active you want it to be, so that you quickly can get to collect all the time value. But of course, once again, the mindset is important. Why are you selling this put option? Are you willing to own these 100 shares at that price? I think that is a more important question before you do any option strategy.
Thank you, Chloe, for answering all the questions, the live questions from our Q&A segment. And thank you to the audience for participating. It's always great to have you as part of the discussion. And as usual, it's about learning together. So we created all the discussion topics, and we've crafted this session exclusively with the Next Level's Chloe Lin, just for you. So now, Chloe, to end off our audience, what is that key takeaway you'd like to leave them with?
I believe even though the market is very uncertain, but most importantly, just like what Warren Buffett said, okay, don't try to time the market, but time in the market is more important. So even though it could be potential bearish movement ahead, but if you are willing to invest for the long run, all right, and continue to use this bear market as an opportunity to collect good companies at good prices, all right, even by just doing shares alone, right, without options, you can really have so much upside in the long run. So I believe that will, once you have the endurance and you have the patience and really the courage to continue to invest during this uncertain time, you will really be rewarded financially, tremendously, in my opinion, after the bull market return. Yeah.
Expert and trader from the Next Level Academy, Chloe Lin, everyone. Thank you so much, Chloe, for being with us on the show. We look forward to the next one.
Yes, me too.
So to everyone who joined us, thank you once again for being with us for Options Masterclass with the Next Level exclusive series. And please watch out for the next few weeks as we have more Options Masterclass with Chloe herself being on the show to share more insights regarding this. Now, as usual, follow our social media pages to be up to date and in the know. Whenever we go live, that's the first place you're going to find out about it. So follow our socials and scan the QR code if you want to find out more, because that's where all the action happens and that's where you can be on top of all the live shows just like this one today. And also, World Cup is happening right now. This is the campaign if you want to find out more on how you can employ other tools to help you hedge during these times. And it's not just about that campaign. It's about helping you and guiding you towards making better investment decisions. And of course, if you're interested in applying what you just learned from Chloe today, do scan this QR code right here for the app details, because it's not about just learning and listening. It's about applying. And that's where the true knowledge lies and the educative experience. So please do check it out, and really on your own time. You know, it's really on the go, and you'll have everything that you just learned from Chloe today, the instruments and tools for options trading at your fingertips and at the palm of your hands. So if you're interested, scan the QR code for more. And of course, today, Chloe mentioned it a few times. You can claim your option starter kit right here. And I think this is also very important, especially for the beginners and the intermediates right here, right now. You can try the options trading with Moomoo if you haven't. And even for the seasoned investors, I've got so many questions from people who are already seasoned investors in options trading on how they can actually do so on the Moomoo app. So you can enjoy a month commission-free options trading if you haven't traded options on Moomoo. So definitely check this out, and we'll come back with more insights next week regarding this. All right, so that was the Options Masterclass. Join us for the next session next week. We look forward to having you as part of the discussion again with the Next Level. And once more, it's an exclusive series that we've crafted just for you. So we're ending 2022. So it's important that you re-strategize and rethink your portfolio and see how you can actually implement options trading as you head into the new year and look out for possible opportunities out there. So as usual, it's a pleasure having you with us on the show. We'll see you for the next one. Signing off, I'm Olivia Higgins.
See you.